presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Well, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes here. This is from Marlo Giavadano. Be strong. Go with your heart and believe in miracles because anything can and will happen. Market-wise, let's take a look at it out here. We had the Dow Industrials down 117, NASDAQ off 60, S&P's off 11.5, gold contract up $3.60, trading at $1,320 an ounce. Silver up 9 cents at $21.10 an ounce. Platinum flat at $1,496 an ounce. Copper $3.26 a pound. Light sweet crude $103.51 a barrel. Bonds, they don't stop, folks. The ever-ready bunnies of the bond market. 10-year up 12 ticks, trading at 124.24. 30-year up almost a point at 29 ticks, 136.19. King dollar down 42 ticks, trading at 80.22. The euro up 6 at 136.11, and the yen down 30, trading out at 101.30. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You're down $14. We do 682 million shares. We are making our way back into a lower range here. Now, if we take a look at the SPY and you want to see the expansion that we had here with volume, folks, this is how it's shaken out. We did today 102 million shares. That's after making a high with 52 million shares. But let's discount the third, and we'll discount the second, and we go to the first. The first, we owe 197, and we had 90 million. You're still down at 102. What does that set up? Well, first off, what it sets up is this. Your next swing point, lowest swing point, is 194.13, 84 million at that level, 193.11, 105 million. The bigger deal here, folks, is still the February 5th swing low. February 5th swing low. We're at 196 right now. That's pretty intense. And that February swing low is out there at 173.21. That's where this market wants to go. Dow Industrials. We take a look at the Dow Industrials. What you have with the Dow is this. She comes down $117. No big deal. She is at 16,906. Your next swing point down here is 16,706. Inside the Dow Industrials, what you had out here today is taking it downtown. You had Verizon. That was down 46 cents. Boeing got hit. That was down 230. Goldman Sachs got hit. That was down 287. JP Morgan got hit. That was down 91. Putting some juice in it. Upside was Walmart. It was up 58. Procter & Gamble was up 37. ExxonMobil was flat. NASDAQ Composite. Here's where we're going to get interesting, folks, because inside the context of where we were percentage-wise out here, this is what you had. The Dow was down 0.7%. S&P was down 0.7%. What you had is that you had the, there she is, you had the NASDAQ down 1.35%. We go over to the composite. We take a look at the composite. This is what you have. Composite was down $60. 2.1 billion shares, monster expansion of volume. Now, this is what you have with the composite also. We're at 43.91. 43.71 is the lower range. Once you get back inside 43.71, let me tell you something. Big problems, folks. Well, they're not big problems because the bottom line is that the market itself, the February 5th swing low as well as the March 15th swing lows, those are your two benchmarks, folks. They're high volume lows that want to get tested. We go to the NDX 100 with 3 Qs. What do you have with the 3 Qs? She come off the high with 39 million shares. That's after making the high of 15 million. We're at 94.26. The lower range would be 91.36. And what was the clue out here? Well, yesterday we had the IBB, the iShare NASDAQ Biotech Index, folks, is what brought the NASDAQ down in February. The IBB had finished a counter-trend bounce yesterday, the day prior to yesterday. It was coming into its downdraft. The downdraft, by the way, had 4.3 million shares. It was testing that with 1.2. Comes off the 1.2, does 1.9. Today's does 2.2. Bottom line, the IBB's going south with what else? Well, the high flyers. That's what they took them south, and they took them south quick. You had TripAdvisor today down 596. Illumina, which is in the biotech space, down 710. Facebook, 253. And Celgene, 314. If you remember the last time that we were down, and we came down very quick at the IBB and the NASDAQ, the leading stocks, four of the six leading stocks at that point were all biotechs. We go over to Google. We take a look at Google. What you do have all these high flyers that took it south. The Google was down $12. Amazon was off about 10 the last time I looked at it. 974. Netflix, NFLX. She was down $15. All with volume, by the way. All with volume. Gold contract. Let's go to gold because the gold and the dollar are fighting left and right, folks. And this is what you have. Gold contract today, nice contract numbers. We did 125,000 contracts. Was having a hard time holding price. You know, we traded from 314 to 325. Right now we're at 320. My take on this is that you're building cause to get up to that 1392 area. And if you want to see something that is always cool looking at, it's Royal Gold, folks. So check out what Royal Gold did out here today. Royal Gold, flat market. 1.1 million shares, however. Royal Gold is pushing into its swing highs with volume. Royal Gold's at 74, wants to run to 88. Silver. Let's go take a look at the silver market. What do we have with silver? SIU4. Here we go. Silver. Silver refuses to back off. She was flat today. 37,000 contracts. We're 2109. She wants to run to 2216. Inside the silver market, if you're just looking at the equities instead of the futures, take a look at the SLV. The SLV right now is at 20.21. She wants to get up to that February swing high of 2130. One of the silver stocks. Now, this one's really cool watching this one. This just refuses to back off, folks. This is Pan American Silver. It's PAAS. Now, check out what it's doing. It's really unusual that when you go from a swing low to a swing high that you don't back off. Well, what's happening with a few of these inside the gold and silver market is this. PAAS is at 1563. It's made 3 different runs to take out the 1563 area. Now, the 1563, going back in February, has huge volume, folks, okay? You're talking about 3.3 million. Guess what? This baby looks to me like it wants to take it out. They're large ABC structures. They've been building cars for 2 or 3 weeks, and I expect those babies want to get taken out. Bonds, the ever-ready bunnies. What do we have with bonds? Man, oh, man, I'm telling you. Okay, 10-year goes up 974,000 contracts. We're at 124.24. Your swing point up here, which is going after, is 126. We'll see what type of volume we get at the 126 level. But these little babies have just been rejecting lower price, have lighter volume. Last Thursday, we came down to the swing point, rejected the lowest swing point, had lighter volume, takes off topside once again. 30-year right now, we're at 136.20. And what's game out here is the 138.10. And, of course, in the 30-year, you know, the 142 is game in a big way. King dollar. Let's go take a look at King dollar. And this is where there's some divergence. And the divergence is between the dollar and the gold market. And this is why. King dollar had a huge sign of strength last week. We go from 79.79 all the way up to 80.60. Has the juice behind it, has the volume behind it, pulls back now at lighter volume. You know, King dollar, she wants to run up to this 81.50 mark, and it's like, okay, so is King dollar going to be running up to those levels, as is gold? You know, we'll see how that fight shakes out. The 10-year, it's yielding 2.561 right now. 877-927-6648. The Dow down 117. NASDAQ off 60. S&P's off 10.5. You stay right there, folks. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish down 117, NASDAQ off 60, S&P's off 7.5. And as you come over to our website, folks, at TFNN, what you're going to see right in the carousel is you're going to see Tiger TV on eSignal. And what you have is this. eSignal launched a new piece of software today, 12.0. Inside that platform, folks, Tiger TV is going to be broadcast each and every trading day. Now, if you've never test drove eSignal, eSignal is one of the best charting services on the planet. Not only just the charting services, folks, what they have, and depending on how long you've been listening to me, or if you've been in the den, you know that their pricing mechanisms and the volume mechanisms, because I use volume so dramatically, can keep up with fast markets, okay? It's an incredible system. This upgrade here, what they put inside this upgrade is a couple option analytics packages that are absolutely amazing. So check it out on the front page of TFNN.com. And if you are an eSignal subscriber, when you have your platform up, guess what? You can be watching Tiger TV all day. So we really appreciate the partnership, and we look forward to doing a lot of business together. Now, folks, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And don't forget, each and every trading day, 11 to 12 Eastern Standard Time, you can listen to Basil. He also has a great newsletter, The Opening Call. The way you get the opening call, you go to TFNN, go to newsletters, go to trading newsletters. You can test drive the opening call 2 weeks absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day?
I am. Thank you very much.
Cool, man. So let's see. What am I looking at?
We're looking at the Dow right now. This is what I show my subscribers. In fact, this is part of tomorrow's report. I've written up. And what I was explaining is, you remember when we looked at this last, I was mentioning to you that it was fascinating that the Dow had actually been in an up channel. One of the things that I like to show my subscribers is how you can use trend lines. Just one simple line on the upside, one simple line on the downside, knowing where to join the particular points of contact is very important. And in this particular instance, there was also a cup formation. I'm showing it here with the pointer. There's the cup formation. And what I'd done over the weekend, I studied this really carefully. I had an alternate wave counter. The Chapman wave, there's a very simple technique I use. You identify the lowest, most obvious low bar, and then from that low bar, you merely count each successively higher peak. And when you get to the fourth highest peak, I label them uppercase letters on the upside, lowercase on the downside, uppercase A, B, C, D. When you get to D, very often that's where you've got to be careful. But you can go to other letters. And in this particular instance, the more I studied the chart, the more I looked at, say, the 120-minute chart. I'm just going to put that up as well. And the 120-minute chart had shown that on the 3rd of July, it had made a peak D. And peak D is really what you want to look for. And in that particular instance, you look to see whether, in my case, the MACD, the moving average, convergence, divergence, two technical tools. That's the MACD and the slow stochastic is a series of moving averages. If they were confirming, in fact, what they were saying is, be careful because there could be quite a sharp pullback. So this morning, we actually went short the Dow. And the chart I'm showing right now is the Dow Diamonds, which is the trading vehicle for the Dow. Here's the Dow chart, and I've drawn these two trend lines to the downside to say if it's going to pull back, that's what we're going to be watching for. And that's exactly where it went in, and it went underneath the maroon line, that red line. Okay. So this is a very important moment for the Dow because it's occurring under disbelief. There are a lot of people that are still talking about much more on the upside, and this is where you've got to be the most careful because as far as I'm concerned, yep, it's a little early. It's only the second day since the Dow made that 17,074 top, but it's under the 9-period moving average, and if at any point this week, if the Dow doesn't take out, say, 17,010 on the upside, but instead takes out today's low of 16,874, you have to be really careful because it'll be testing the up channel, what I call the inside track support line. And that support line ends if the Dow goes underneath 16,790. So for my subscribers, we have long positions, we have short positions, and one of the short positions is a stock that is very very important to me. It's been important for years. I call this the Dow Quartet. I call it an index. It's not really an index. It's only 4 stocks: GE, IBM, Triple M, and UTX. UTX is what I call my pilot light stock. GE on the very short term, but UTX is more the trends that I watch. And for the first time in a long time, since United Technologies, which is a multinational stock,
sure.
I mean, it's a company all around the world, has been pulling back, and it made 120.19 high, but the all-time high was 120.66, and that was made at a peak F top in the Chapman wave, and that was back on the 4th of April. And now just a quick visual just shows you that there's an arching over, I call it an arc formation, that's being formed in the weekly chart. And if UTX, which closed down at 114.07, down $1.03, if it takes out 112.60 on a weekly basis, that's not very good. And I'd be surprised if the market, the general market, even though it's just part of the Dow, and the Dow's only 30 stocks, to me is very important. So we've been short since just over 116, and my subscribers also have put options, so they've done extremely well to the downside. But I'm watching this real closely, because on the downside now we've got a leg D. D is where you're always a little bit careful both on the upside and the downside. So based on the 120-minute chart, yep, there could be a little bit of a bounce, but this is telling me that in this rotational corrective market that we're looking at, whenever we've gone to new highs, there's been a consolidation and it's rotated through different sectors. All of a sudden now we're looking at cyclical stocks, and this is going to be very important, because if United Technology starts to break down, yep, it's only one stock, but GE gave back a lot today. IBM's not acting very well, and Triple M is acting a little bit better. So I'm watching this very closely. And you had spoken about the IBB, something that we've been short for a while. We don't have a position right now. But that, in an alternative wave count, also says be real careful, because the iShares of in the NASDAQ, the biotech ETF, that was a leader on the way up. It was a leader on the way down. That April smashed to the downside, and on this retracement. So if the IBB does take out 250, it's at 254 right now.
Yes,
that'll start to impact the weekly chart, and that won't be very good. And this is the thing, a very selective move. GM actually held well. Alcoa just came out with some good news. So we might be looking at maybe we actually own Ford right now, and it's still holding quite nicely. So you might be seeing some of the late cyclicals that could do better, or could do okay in this environment, but some of those momentum stocks really do need a breather. I mean, that would just be the natural thing, and we're going to see the next couple of days are very important, because the volatility index, for those people who follow the VIX index, had a very good spike today. It went all the way to I think it was 1249, was it? 1251, closed at 1198. So I'm watching the volatility index, because if it takes out the most recent high of the 17th of 1289, then for the first time we will have a sustained rally to the downside, because that'll impact the VIX index in the weekly chart, and that's really, to me, that's buying or selling pressure right now.
Sure.
It's selling
well,
pressure.
I'll tell you, that GE, Basil, has a high volume low at 575.
Right.
So
we're going to be watching that very closely.
Have a great one, man. Have a safe one.
Thank you, Tom.
You stay right there, folks. We're coming back right back. It's Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had, Bank of America down 36 cents. Facebook was off 253. The Twitter 282. You had Micron Technology up 27. Yahoo was down 99. The solar stocks, they got absolutely smoked out here today, folks. If you take a look at the JKS, that was down 262, trading at 26.99. Came off those counter-trend bounces with volume. So if we pull this back a bit and put it on a 2-year weekly, what you're going to see is this thing has been topping out since November of 2013. It's going to be gunning for this high volume low from May. So we'll see how it basically hits that high volume low. That's 22.19. And that's right across the board, mind you. After the close out here, what we had, I believe the TCS, the Container Store. Let me just see something here. Yeah, the Container Store, that closed at $27.07. It's trading down $4 right now at $23.50. This was on a high flyer that is doing a monster ABC down. So if we bring this back, we look at what the A to B structure is. Oh, man, this is a big one. Evidently, we're not buying packages anymore, so check this out. I never can figure this out anyway, but wow. Okay. So first off, let me see what this went public at. So this came public at $18. 14.3 million shares were issued, and that was in October. Okay. So the first day that it went out, pull this back a bit. It was issued at that, but it doesn't look to me like it went out at that price point. Looks like it went out at 37. So, it issued at 18, traded to 37 first day. This is a monster ABC down. Now, the most conservative one would be 36 is your A. Yeah, 36 is your A, 25 is your B, so you get $9. Your C is 30, which is your $21. 21's coming at. Let's see what they're saying fundamentally. So, fundamentally, what you have is this. Their gross margin is 58%. The tax rate's 35%. Well, they don't worry about tax. They're losing money. Their net sales, they lost 7 cents a share. The first sales, the comp was down almost 1%. That's pretty bad when you just become public. They saw sales. Earnings per share are going to come in. They see earnings per share coming in for 2014 from 49 cents to 54 cents. Okay, Container Store says it's experienced retail funk along with competitors. It says first quarter represents less than 0 of its annual earnings. The shares are down 11% after the market. They fell 2.6% in regular trading today. The estimate was 6 cents. They lost 7 cents. Gross revenue estimate was $174 million. They made $173 million. Margins are still pretty good. 58% margins. That's a decent margin. Let's just see quarter by quarter what they've been doing out here. So if we take a look at it, well, actually they're brand new. So they've been pushing. They push big numbers out. Man, oh man. So they're pushing out $188 million a quarter. They expect to do $216 million next quarter. That's a lot of numbers for containers. No doubt about that. Let's go over and we take a look at Big Blue. Why Big Blue? What Big Blue had done is that she got a small sign of strength last week. She got up to a price point of $187.27. Did 6.6 million, but guess what? She was going into 11 million. These counter trend bounces, folks, you always want to be looking at, okay, what are they going into? That's crucial to understand. And Big Blue was coming into the downdraft from April 17th. If we take this and we put it on a longer term chart, what you're going to see is that Big Blue hasn't been able to get out of its way for quite a while. When in fact, even last year the market went up substantially. Big Blue is trading at the same price point that it was trading in October of 2011. So that's pretty intense. We'll see how it handles coming after this swing point, because it looks to me like she's been building cause to get into lower price. What you have with many of these equities, folks, is this. Because the run was so substantial last 2 or 3 years, the price points that have real volume, meaning buying and selling volume, are substantially lower on many of these equities. It's something to keep a heads up on. And of course, depending on what you own, you want to get stops in these equities. We take a look at the Russell 2000, the actual index. And what the Russell has done is this. Classic test of the high, couldn't handle it, couldn't handle the March high. 2 days, you come down with a vengeance. The Russell 2000 is trading at the January 16th levels. Now, this is what's really going to get bizarre, because when we take a look at this, the Russell 2000 itself started out the year only 10 points from where we are right now, 10 points lower. So we started out the year at 1162, and right now we're at 1172. So let me show you the difference, though. The difference is dramatic, you know, when you start looking at the S&P. So the Russell is right where we started out from. We take a look at the S&P, different ball game, but this is important in the context of what we're looking for, because once one indice gets under where they've been trading, meaning for the year, guess what? The other one's game. So the SPY is at 196. 184 is the number there. If we take a look at the Index 100, which has been the strongest and has been the leader, no doubt, we pull this up. You take a look at where the Index 100 started. The Index 100 started at, it's not that far down, actually, 87. You know, so for a market that, you know, has been higher, you don't need much of a pullback in order to basically get to flat in this market this year. What we definitely do have is this: the swing lows that were generated inside the Index 100 in February, a game, and those are low prices, no doubt. What we also have in the Index 100 is those April lower swing points have huge volume that's sticking out that wants to get tested. The oil market, let's go over and take a look at the actual physical oil in the future market. We have here is this. She did 230,000 contracts today. We are at 103.46. This is going to be intriguing. This is why, because you had an expansion of volume as you got to the 103.59 level. The 103.59 is where oil broke topside on the 12th of June. So this was a crucial level. You know, we'll see if she's going to hold this 103.59. When we broke topside like that, and particularly we have a high volume high at 106, those spikes that had occurred in 2011 and 2012 inside the oil market, I suspect that there's still game to get hit. You know, and this is where the wild cards are going to come in, and, you know, bottom line, come in all over the place. You know, politically, you know, and energy-wise, you have the spike, the 114.83 spike out there in 2011. You have the 112.24 spike in 2013. You know, so we'll see whether those little babies are going to get hit. I do expect that they will get hit. You know, so it's like, okay, why all of a sudden, you know, in the market the selling occurs? You know, bottom line, folks. Okay, you never know. But when markets get stretched like this, when folks continue to say that, listen, you can't get a 10% correction, which is a normal correction in the marketplace, when people feel safe in the marketplace, that's when it always happens. And it's always, you know, and the amazing part is that you always hear the same things. It's different this time. It's never different, folks. It's always, when I say it's never different, the markets are never the same. They change. But in the context of markets will never go down, markets will never come back after they have been down, all of that above. When you hear that, you got to use that information to basically look at markets and say, okay, are we overextended on a short-term basis, on a longer-term basis? Where are we? You know, and if you are a fundamentalist, what ends up happening is that these social network stocks, of course, were and still are priced at huge valuations. The S&P itself is priced at 18 times earnings. That's a big number. No two ways about that. In fact, every time you get to 18, you know, in 2011 we were 18, and that was the largest correction that we have actually got since the 2007 lows. You know, if we take a look at that 2011 correction, we were, yeah. So the S&P went from 1360 down to 1074. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. The Dow Industrials finished down 117. NASDAQ off 60. S&P's off 10.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. You had Citigroup was off 56 cents. You had Coca-Cola down 20. Disney was off 73. We had Honeywell down 17. Merck was down 35. Inside the Dow Industrials, as to what was taken at South versus North, you had Verizon, Boeing, Goldman Sachs, and J.P. Morgan. Now, if we go over to Goldman Sachs first, let's take a look at Goldman. What we have with Goldman is this. Goldman came down today with 2.4 million shares. Takes out the swing point that had 3.1. Goldman also has that high volume spike at 154. You know, the thing that's amazing, folks, there are so many high volume spikes at lows, and these babies are going after them. J.P. Morgan, what you have with J.P. Morgan, she had volume come out of it also. She's down 91 cents. She had taken her swing point out with volume yesterday. She is at 55.76, and we'll see how she comes down to the bottom of her swing. Her swing is 53.06. What you also have is this. You have these financials that have been holding these highs for almost a full year. That's always dangerous, folks. When you're at highs, you're going sideways with no volume. That's distribution in spades. EGLE, yeah, this was a tanking big time. So this is Eagle Bulk Shipping. I was actually looking to see what the heck's going on with this, but bottom line, she was down 31%. Monster volume, huge volume. She's at down 87 cents. She's trading at 197. Put this on a 2-year basis. She's been coming down, and let's see, so she's at 191. She's going to go after 143, and she can break 143. It's pretty amazing, actually. If I bring this back and put it on a 5-year monthly, what you're going to see is that, yeah, 181. The last low is 132. That wants to be basically go after. If we look at dry ships, that was only down 8 pennies. So there's definitely something wrong. My man Dave White says the drop in the share comes after 2 seeking alpha posts that compare Eagle Bulk Shipping to Genco's recent bankruptcy filing. That'd be interesting. EGLE. Let me look at this up again. Let's pull this up. So it'd be hard to comprehend that an internet post can bring a stock down 87 cents when it's only a $3 stock and with that type of volume. So if I pull this back a bit, because when I was looking at this earlier, folks, I was looking at it saying, okay, is this an opportunity to get something that can bounce right back? Yeah, I wouldn't touch it. That's the bottom line. 143 is game. You know, what does get interesting, though, is this. So check this out. When you come into a swing point and the volume comes out of the equity before the swing point, that's a big deal. So the swing point we're talking about is 143 and 191. The volume characteristic on the weekly is 3.7 million. So what you'd want to see is that you wouldn't want to see it hit it this week. You want to see it hit it next week. So we'll see where that shakes out. You know, because in the past, Eagle used to be basically a lot stronger than that. Yeah, the sector itself got crushed. There's no doubt about that. We take a look at. Yeah, we'll stay with that sector for a second. Let me see. I'll look at that sector. So we get a few more up here. Diana. Let's look at, yeah, there you go, Terry. See that? We're on the same deal. DSX. So, DSX. Oh, she gets smoked too. I see. Interesting. Okay, so she's only down 26 cents, but she get hit. Okay, but now let's put this on a weekly. Yeah, see, this is going to get interesting. Okay, so DSX, Diana, down. Don't touch it right now. No doubt about that. Okay. Put this on a 3-year weekly. Yeah, this is pretty cool. So the first line of defense, we can get interested about this, is 893, and we're at 1047. And then you have a swing high up here that looks pretty good at 1374. I put that on a 5-year. Yeah, it's not bad. Yeah, let this baby back into 832. You back into 832. If you back in there with volume, with lighter volume, you get a decent consolidation. And if we take a look at what kind of bread, what kind of cash flow they have, small, well, 50 million a quarter. That's they're pumping out right now. Overseas out here, well, here let's go to the Asian market, because what we do have is this: is that last night we had the Asian markets were flat, but what you're going to more than likely see tonight, because the way our markets were down, we'll start with the Nikkei 225 in Japan. Last night that was down 65 bucks. We're at 15,300, and you know what? That tucked itself back into the lower range too. So the Nikkei is game again for hitting down the other side of the range, meaning 13,885. The yen, it's all going to be the Nikkei 25, folks, is all about the yen-U.S. dollar correlation. The yen right now is at 101.57, getting a little bit stronger. That's on the shorter term basis. On the longer term basis, this yen, my take is that we've already bottomed out at that 76 area, and she's been building cause for about a year right now to try to get up into the 124 area. Right now you're at 101 yen dollar to 1 U.S. dollar. And of course, the higher that gets, what ends up happening is that the more exports that can come out of Japan going across the world. It's hard to believe that Japan, the industrial sector, could stay in business when the yen actually got to 75. It's absolutely amazing. There's no two ways about that. If we go to the XAU and the HUI, both of them are set up, folks. They're set up to go make not only an ABC structure on the way up, but they're going after their March swing highs. It's going to be really interesting watching how this market shakes out the next week to week and a half. The reason being is that it's always hard for the gold equities, the silver equities, or the gold contract itself and silver contract to go higher when the market's going lower. Because what happens specifically is that when the market goes south and goes south very quickly, it turns into a liquidity event, and people will sell anything and everything to turn around and get cash, period. The way the market's set up right now, it looks like gold and silver want to make that A to B equals C to D. And that very well could turn into a political situation and a political haven versus a safe haven. There's a difference. You stay right there, folks. We'll be coming right back. Don't forget, go to the webpage at TFNN. Check out the new eSignal 12.0. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You got great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. This is a quote by Albert Einstein. It is better to believe than to disbelieve. And in so doing, you bring everything to the realm of possibility. You know, it's amazing. Everything's sitting right in front of us, right in front of our nose, folks. It's like we've got to open our eyes and see it. Market-wise, let's take a look at it out here. We had the Dow down 117, NASDAQ off 60, S&P's off 10.5. Now, all the markets, folks, came down with volume. We go to take a look at the Dow Industrials first. What you have the Dow Industrials is this. She's only down $100, no big deal, 117. You did 682 million shares. We are at 16,907. The lowest swing point that she's going to go after is 16,703. We'll see whether we get the expansion of volume and a follow-through. What we do have happening, of course, in the summer, you have Tuesday, Wednesday, and Thursday. You can get volume inside the marketplace. NASDAQ Composite, yeah, that came down. It came down hard. Down $60. Expansion of volume, 2.1 billion. The NASDAQ is in a position right now that can be really fast and furious on the downside for him. And this is what it is. 43.71 is where she broke out of. She hit 43.72 today with volume, by the way, okay? You get back inside that area, which I expect we're going to get back inside there ASAP, probably tomorrow morning. Guess what? It puts game on for 3,900. 3,946 was the low that was established in April. That is game on. If you want to take a look at the NDX 100, they were basically selling that baby down today. We did 40 million shares. That's not huge. What we do have, however, though, you get a high volume low at 84 million shares. So that is a big number. That high volume low is out there at 83 rather. Right now we're at 94. The small caps, they followed through to the downside today with volume. The Russell's at 1172. The Russell's making our way down to this 1082 area. If you want the correlation inside the IWM, what you have is that you're at 116.34. The IWM had tested its high, failed on price, failed on volume. That was in July. Now, bonds. Check this out. Bonds are just amazing. You know, and I've talked about bonds. Well, I talk about bonds every day because, you know, bottom line, bonds move the U.S. dollar. They move lots of sectors. We've had bonds that have been very inexpensive, but they haven't been inexpensive in the context of the world markets, folks. So what did the 10-year do out here today? 10-year goes topside once again with strength. We're at 124.25. 30-year topside again with strength. We're at 136.23. Now, in order for bonds to go higher, most folks thought that interest rates are going to go up sooner, a lot sooner. They haven't gone up. And in fact, if you want to see this, there's two articles I want to have you look at right here today. The first one is that there's going to be a bill that is going to try to get put in tomorrow by a couple congressmen. And what that bill is specifically going to be about is that they want the Federal Reserve, to calculate interest rates by a rules-based theory. And that rules-based theory would be by something like John Taylor's. And I've had John Taylor on many times. It's the Taylor rule. That bill's not going to, you know, get anywhere, folks. But what you do have is that's like, you know, saying to the Fed, hey, you know, we want rates to move up. Okay, so politics inside of the Fed. But what you have is this. We have less bonds in the marketplace. We were talking about yesterday, there's 253 million less that's going to be just issued this month. That's a big number. More importantly, what you've had is this. You've had large corporations issuing dollar bonds, across the world. In the year 2013, that was the largest issuer of dollar bonds. Now, when you issue a dollar bond, this is what ends up happening. And a dollar bond means a U.S. dollar bond. It means that whether it's a sovereign country or a corporation in another country, they're issuing when they issue dollar bonds, first off, they need U.S. dollars to issue them. So they have to buy U.S. dollars in order to back the paper up. Then what they need is that they need U.S. dollars to pay the interest on the bonds. Okay, so why do they do it, number one? Well, what has happened is that they have got popular because large investors want to deal in a so-called hard currency, meaning the U.S. dollar. And they do understand that the dollar could fluctuate, but they want the dollar back versus a euro back versus a yen back versus a peso back. That's the bottom line. And what has happened because of that is this, is that foreign corporations have been able to issue more of these bonds at better rates than they have been able to issue at a euro, at a yen, at a peso. So it's important to understand the supply line, because this is all about volume. Same deal. This is the fundamental theory behind it, though. So you get the supply, you get the demand. Okay? What has happened in 2014 is that it's going up exponential, the amount of dollar bonds being issued. And what is going on now is this, is that there's an article out today by PIMCO. So PIMCO, folks, okay, is bottom line the largest bond deal in the world. So check this out. This actually just came out at 5 o'clock. The manager of the world's largest bond forecast, largest bond fund, forecasts sales of dollar-denominated notes from Asia will climb to a record $150 billion in 2014. $150 billion. PIMCO Investment predicts the size of the regional market may double to $1 trillion in 3 years. Let me tell you something. If that thing doubles to $1 trillion in 3 years, folks, rates are going to stay low. The dollar is going to stay, well, the dollar's not going to stay at 70, 80 if that doubles. Global investors' demand for hard currency offshore bonds has led corporations to tap longer tenor debt at attractive rates versus short-term bank funding. That's what it's all about, folks. It's a monster market. Yields on debt are falling this year after Federal Reserve Janet Yellen last month said she was committed to keeping U.S. interest rates low. The extra yield investors are asking to hold Asia investment-grade corporate dollar bonds over U.S. Treasuries narrowed to 42 basis points this year. Narrowed 42 basis points this year to 155. So that's a 1.5% over the Treasury, over the Treasury, the lowest since November of 27. Global funds, especially those from the U.S., remain underinvested in Asia, and many are looking to add, PIMCO's report said. Okay, so watch what ends up happening there, is that, this gets really interesting now. So watch this. You see that one sentence there, that many investment funds are underweighted debt structure in Asia. So what these large funds will end up doing is what, folks? They will buy the dollar bonds of corporations, issuing them in Asia, issuing them in South America, issuing them in Europe, no matter where it is. This is a dynamic trend change that can absolutely be huge. This is why. Most of the large losses inside, whether it's a Procter & Gamble of the world or funds of the world, have to do with, they might make the right choice of company, but then, meaning buying debt of a company, but what ends up happening, the currency of that debt could go up or down. Sometimes they'll make a fortune, most times they lose a fortune. Picture how this trade shakes out. You have large institutions. They want to take advantage of the growth in Asia. Inside their perspectives, the growth in Asia can have equities and debt. It's not going to be just one. It's not going to be just equities. What is the best way you can do that to basically be delta neutral and take advantage of what you think is going to happen? You're buying an Asia company debt that's in U.S. denominated currency. You stay right there, folks. We'll come right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 117, Nasdaq off 60, S&P's off 10.5. And as we do each and every Tuesday at 20 past the second hour, we have our man, Mr. Andy Hecht. Andy has an outstanding show right here at TFNN, folks. Broadcast every Tuesday and Thursday, 3 to 4 Eastern Standard Time. You can also check out his newsletter. The way you do that, you go to TFNN, you go to newsletters, trading newsletters, you see the Technomental Commodity Report. You can test drive it right here, right now, 30 days, absolutely free. Andy Heck, what's going on?
Hey, Tom, how are you?
I'm doing great. Oh, you sound good. You don't sound like the Godfather anymore.
Oh, no, I'm good. I'm good. Hey, I want to, before we start, I want to wish a happy birthday to my dad. He's 84 today.
Happy birthday, Mr. Heck. That's a beautiful thing.
That's a beautiful thing.
Let's see, July 8th. He's a Cancer. He's a Cancer. That's a beautiful thing, man. I
84.
Like that. 84.
That's, God bless him.
That's a fact,
He's down there with you on the other coast.
That's good.
In Delray Beach. Yeah,
I know Delray Beach well.
Beautiful place. Atlantic Avenue, right?
That fire station, man. I lived in Boca for 15 years. So,
oh, did you?
Yeah.
I didn't know that.
Yeah.
You see that? Live and learn every day.
Yeah, totally, man.
So I was listening to what you were saying about these bonds.
Yeah.
Very interesting.
Isn't it?
And you know what, Tom? Very bullish for commodities.
Okay.
Because interest rates will stay low.
Yeah. You know, I'll tell you, man, I caught on to this like 3 years ago. And I started seeing them issue them. I'm saying to myself, well, this is interesting. You got to buy? And I caught on this because of the gold market. Do you know what I mean? I says, okay, because I always got to watch the dollar. I said, okay, They're buying bonds. They got to do it in U.S. dollars. And it's got exponential, though. I mean,
I mean, these are big numbers. These are big numbers.
And now, actually, when I started thinking about it, though, well, you know, you trade a lot, and you've seen big companies trade a lot. Most of the money has been lost on the currency transaction.
They always get the currency wrong.
Right. So it's like, hold it, man. I can see how that works. You got a huge company in Asia that's growing. You got, you know, one of our big funds in the U.S., they want to invest in it. One of the big schools want to invest in it. It's like, hey, guess what? That's a great way. You're going to invest in the debt of the company versus the equity. They might have the equity already, but, you know, they want to split it up. So
absolutely, absolutely. And you know, I have to tell you, today, I think gold and silver are ready to go.
Listen, man, I agree. You know, it's going to be, I love what Royal Gold did out here today. I love what
that's
TAS
what I was looking at, the divergences. Yeah, I love it. And I love the action in gold. I think tomorrow could be a very big up day.
I'm giving myself 2 weeks.
Okay.
You know, but the reality is when this goes, folks, A to B see patterns. The A to B, folks, is a fast straight line move. Because gold moved like it did and silver moved like it did, we're talking, you know, $50 in one day. Let me tell you something. This can move $50 in a day, and if that's the case, the second part of this move will be $75 in a day. It'll go.
That's right.
It'll go right to the top. Yeah, we'll go right to the top.
This is our 13th day of consolidation.
Yeah.
And you know, and even in the consolidation, Tom, if you look at it, it's higher lows. I like that. I really like that.
And silver, you know, is stronger
silver's
than
even
gold.
better.
Silver's
even better.
Silver's stronger than gold.
And it's stronger than gold, and it's still cheap relative to gold.
It is cheap, man.
It's cheap at 62.4 to 1.
Well,
cheap.
you know it's amazing. Okay, and time, folks, is important aspect of the metals market, period. Okay, because this is interesting. I read this article, and you know, Goldman Sachs, of course, is bearish on gold, right? And what the article was about is that, hey, listen, man, gold's going downtown, okay? And I think they're looking for it to go downtown. Inside, this wasn't a Goldman Sachs article, okay? This was a different article, but they mentioned Goldman Sachs because Goldman Sachs is bearish on gold too. But what the article is stating is that, yeah, on a short-term basis, gold is going downtown, and they're saying, well, yeah, on a longer-term basis, it can go up because it can keep track of, you know, price structure, but it can be off by like 2 decades, right?
Right.
and folks, you know, the right had a right to say that because what did happen for 2 decades, gold was low. It got killed, okay?
Right.
But guess what? In the context of where gold is right now versus where it was at the highs of 2011, well, guess what? You're only at $1,300. We're not at $1,900.
Let me tell you something, Tom. You know, above 1335.
Yeah.
Goldman Sachs will not be short gold. And it's Jeff Curry, their chief commodity analyst, who's bearish on gold. You know, it's very possible that, you know, other people who actually take risk within Goldman Sachs are not quite as bearish as their analysts.
Yeah, right.
You know,
because Goldman, right, they're the ones that were I mean, isn't it Blankfield that he was one of the largest gold dealers. And didn't they buy
he was
that?
a gold. When I started, Lloyd Blankfein was the gold coin trader at Goldman. Gary Cohen, when he came aboard, he was, I think he came out of the oil pits, but he was a base metal and silver trader.
Right.
These guys have to be looking at this market. It's got strength in it. There's no question. The fact that the GLD is buying gold, the fact that the gold stocks are diverging, the fact that, listen, it's all positive here. And the fact that interest rates are going to stay low. This is the key. By the way, that's what got it to rally $50 in a day.
Yes.
When Yellen said that interest rates are staying low. Low interest rates, forget the dollar for a minute. Low interest rates are a prescription for higher gold prices because the cost of carry goes lower.
Yeah, exactly. It's zero.
Right, exactly. Your money in the bank doesn't yield anything. Listen, this is not a modern day thing. This goes back 3,000 years.
Yeah, I know. No doubt. No doubt.
So let's talk about some of the other action today. Nice action in base metals. Alcoa earnings, pretty good.
Alcoa, let's see what they did. So Alcoa,
they're pretty good.
Alcoa closed at $14.85. She's trading 15. And what does she see there? They finally making money. What a beautiful thing that is. Oh, look at that.
Great is
they
that?
made good money. So the estimate was it was 12 cents. They made 18 cents the month.
No longer a dog of the Dow, huh?
I know. No, that's right. I know.
And you know what? Listen, the automobile sales in China, in the U.S., are going up.
Yeah, they are.
So we've seen zinc go now to a 35-month high.
Okay.
Copper is doing very well.
Oh. SCCO took off beyond belief.
Yes, absolutely. Base metals for the second half of the year could be the sleeping giant here.
And that would mean that, industrial production's going up, which is great.
Take a look at Valley. You're the one you always look at.
I own it right now.
Okay, beautiful thing. Yeah, I like them. I like them all.
Yeah.
So that's looking good. Natural gas had a terrible day yesterday.
Yeah.
But reversed today, made a new low, came back, closed, positive on the day. Well, a little negative on the day.
Yeah.
But above 420. I think with inventory so low, this is a scale down buy here.
Okay.
That's a fundamental trade, not a technical trade.
Yeah.
Because technically, it broke down, but I don't think there's a lot of downside in that natural gas. And look, all of these commodities, there's a lot going on in the world, particularly that could ignite something like gold and silver very quickly.
Yeah. Yeah.
All it takes is a news story to get it up. We make a new high, and then we run.
Listen, man. It's in. Yeah.
It's in the cards.
It's in the cards. It's just.
Yeah.
You're at a low level, folks. That's the real key here. Andy, you stay right with us. Folks, we want to hear from you. Our phone number is 877-927-6648. Dow down 117. NASDAQ off 60. S&P's off 10.5. Don't forget, folks, no matter where you are in the world, you can pick us up right on your cell phone. The way you do it, TFNN.MOBI. Andy and I are going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 117, NASDAQ off 60. S&Ps were down 10 inside the commodity market. We had lean hogs are off 1.5%. You had cattle down 9/10. Beans are off 6/10. We're talking with our man, Mr. Andy Hecht, and we are talking commodities right now. So, what do you think? Hogs, cattle, you think we can eat anything? Do you think we can shoot them or what?
You know what? The cattle, man, it's after July 4th, so the peak of grilling season. Makes sense they sell off a little bit, but I can't get too bearish here.
Okay.
I got to see. Not on the cattle. That's too much of a crazy market. It's very overbought technically. Needs to come back to 148, 150, but we'll see. You know, I saw something really interesting that you might be interested in here.
Okay.
a couple of banks from like J.P. Morgan Chase to Citigroup are reducing the weighting given to exports in their currency forecasting models. So this means that they believe that the effect of commodity prices on currencies like the Australian dollar and the Canadian dollar is delinking.
Okay,
and I think that's...
You got to walk me through this again. Say this again. Okay,
so banks have these forecasting models to forecast currency prices.
Okay.
So a lot of them, and quite rightly so, for things like the Australian dollar, the Canadian dollar, which are big commodity producers.
No, I agree.
They would put these in. They're delinking it. They're saying it has less to do with commodities because this year they saw a divergence between, let's say, iron ore prices and the price of the Australian dollar, relative level.
Okay.
Now, in my opinion, I think this is like, let's say, horse hockey. I think that these currencies will revert. The $8 and the Canadian dollar are such commodity-based currencies, but I think it's so interesting that the banks are changing their models here.
So specifically, folks, what happens is this. Picture just as Andy said, whether it's Australia or Canada, it's a commodity-based economy. Well, guess what? When commodities go up, those economies get a lot richer because everyone wants them. That's what it comes down to, right? And so they're changing that model. They think there's a disconnect inside it. Well, God bless them.
They're basing a disconnect on, a couple of months of data, which is always a mistake.
Well, I think, I agree, for sure. And I think what we have here in the United States, now this is where this gets really intriguing, is that we talked about the bonds, the dollar bonds that are issued all over the world, particularly in Asia. And the next thing that, is going to be flying out the door, folks, okay, is the natural gas and oil, meaning we being producers of natural gas and oil going from basically importing it to exporting it.
Exactly.
That's going to, it's like the cylinders are really starting to work here, So.
Oh, yeah. Absolutely. I mean, look, our natural gas inventories might be quite low this year because of the winter that just passed.
Yes.
But our reserves are quite high. And it's all a question of, the ability to frack. I actually read another article that I thought was really interesting. You'll get a kick out of this one. They say that seismic activity in Oklahoma is up big, and the environmentalists are saying it's up big because of fracking.
They're worried. I didn't read that article. I saw it go by the tape, though. Right.
Yeah.
Right.
Now, so they're worried about that. Now, that could curtail a natural gas production, and that's maybe a mixed blessing for the producers because they'll get a higher price for what they do pull out.
That's funny, huh?
It's funny.
Yeah, no, it is. In the context that, you're looking for natural gas to go higher, it's like, is it going to be a storm coming in from the Gulf? Is it going to be that? Is it going to be, people just get cold and stop turning to natural gas?
That's right. Well, I mean, there's so many things that can bring natural gas prices higher even this summer. If we get an extended heat wave, the demand for gas goes up.
What it definitely already showed with Arthur, that storm that turns into a hurricane, folks, okay, is that the Gulf is wicked hot. Because this is how it fundamentally normally goes. Fundamentally, folks, what happens is that these storms come up from, the Caribbean, and they're coming across the Gulf, and they get hot. This storm basically started in Florida, which is really unusual. It started in the Gulf, and it didn't even stay in the Gulf long, and it got hot enough. So
right. They usually start in between the U.S. and Africa.
Exactly,
and then they move over.
Yeah. So
and they pick up steam there. Listen, it's July 8th. We're at the beginning of the season.
That's early.
It's early. It certainly is. Hey, one thing I wanted to let you know about that I saw today, cocoa. Cocoa closed at around $31.24 a ton.
Yeah, look at that.
Some reports coming out of the Ivory Coast that because of excessive rains, farmers are finding it difficult to get the beans from the farms to the port. And we all know that cocoa demand is up and growing in Asia. And, any kind of supply issues, that's what could cause price spikes there. The rally, which has been a very significant rally in cocoa, has been slow and steady. Now, when you're up in these levels, any supply problems, man, that's where you get the spikes.
Okay, let's go to sugar. What's going on with sugar?
Go to sugar.
I haven't traded sugar for a while.
Yeah, and you're probably
God.
wise. Yes. Yeah, nothing going on really.
Yeah.
The interesting thing is that the October contract is at a very nice premium. The March contract is at a very nice premium to October. March sugar is over 19 cents, while nearby sugar is at about 17.68. And the reason for that is the fears of El Nino and how that could affect sugar production in some sugar-producing countries. Now, sugar's been in a surplus, but the effects of an El Nino could force it. Some analysts think it could force it in the next couple of months into a deficit situation.
And that's because, is El Nino the one that gets hotter? How does that work?
I think El Nino is the one that really affects the equatorial climates.
Okay.
And could cause excessive rains or excessive droughts.
Rains, I got
rains or droughts,
Either or,
just like a couple of standard deviations off the norm, which will affect, production. So we're seeing this big premium in terms of deferred sugar. Nearby sugar, we're in a range, Thomas, 17 cents to 19 cents. Breakdown, it's a sale. You break above, it's a buy. That's really what we're not seeing much there. I don't think you're missing much by not trading it here.
No, that's for sure. I'm tempted to go into. Let me look at these hogs for 1 second. So,
all right, let's look at the hogs.
We went up limit 2 days, right?
Yeah.
You're at 129. See, we had volume come out of this really nice today. I like what happened today, man. I mean, look at this contracts. Yeah. 283,000, 23,000 contracts, man.
Yeah,
that's not 28,000. Yeah, 28,000 contracts.
Yeah, so I'm showing overall. Let me take a look.
Can we make it to
56,000?
Can we make it to $1.18? See, $1.18 would be my. That could be a normal counter trend bounce.
I will tell you, I think we can only make it to $1.18 if the cattle prices start coming lower.
Yeah.
I think it's a question of consumer hot potato here. What am I feeding my family tonight?
Yeah, no, I can see that. And that's where, I guess chickens don't trade, and thank God they don't, but everyone's going to be eating chicken, man, because chicken's
expensive too now.
Yeah?
Have you bought organic chicken lately?
I probably have, but it's pretty expensive. I'm a steak eater, so I'm paying up the nose anyway. Yeah, but you know what? I was surprised that the restaurants haven't gone up. The restaurants themselves must be losing money because the restaurants haven't gone up as much as the price of cattle has actually gone up.
I wonder if it's the restaurants or the meat distributors.
Oh, I see. Okay.
If it's the meat distributors, maybe they had some hedges on, and maybe it'll come all of a sudden in the coming months.
And they know that they can't if they destroy the price structure so much that people say, okay, they change. That would make a big difference. Look at one of the tigers in the den said the grocer just had 10 to 1 on sale for $14.95 a pound. Because if you change the structure too dramatically, then people start
sticker shock.
Yeah, but they start eating something else and they like it.
Right. Exactly. Start eating rice and beans.
Yeah.
I mean, a lot cheaper. A lot cheaper. Rice prices have come down a lot. Kind of an oversupply there. Look, there's choices. There's certainly choices. But, it's going to be very hard to change the culture of the United States and Europe, which are carnivorous.
Oh, sure.
And Asia is moving more towards animal proteins.
Yeah.
So there is underlying support. But, we have to build these herd sizes up, and then they'll come back down to earth. But right now,
And how long does it take to build?
About 3 years, I'd say.
That's a long time. Yeah.
It's a long time.
That's not like a piece of pork.
We're still suffering from the, remember when corn prices were $8?
Yes.
I mean, double what they are now?
Right.
We're still suffering from that.
Right.
That's what the beef market's suffering from.
Yeah.
So, it's interesting. It's interesting.
Listen, folks, don't forget, every Tuesday, Thursday, 3 to 4 Eastern Standard Time, right here, you can check out Andy and all the programming at TFNN, 9 o'clock in the morning to 6 o'clock in the evening. Get right on your cell phone at TFNN.mobi. That's the full audio stream. If you want to get Tiger TV, folks, all you do is you go to TFNN.com. On the right-hand side, you'll see a little box with devices. Hit that. Our servers know exactly what type of device on. You can get the charts, TV, audio, visual, a whole ball of wax. Andy, you have a great night, safe night. Look forward to speaking to you on Thursday.
You too, Tom. Happy birthday, Pop.
Happy birthday, Mr. Heck. 84. It's a beautiful thing. Another 84 years, baby.
Absolutely.
You stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. And, when we talk about this story never ends because every 4 or 5 years, the military-industrial complex, once they get audited, it always comes out that we're paying a fortune for parts. So check this out. So this is Textron. And Textron, folks, okay, is Bell helicopter, Cessna, Textron systems. They're huge. They take in $14 billion a year. One of the largest defense contractors we have. The Pentagon paid Textron Bell helicopter unit $8,123.50 for gears that should have cost $445, according to a report by the Defense Department's Inspector General. The gears that were marked up 18-fold were part of a $9 million excess payment by taxpayers cited by the Watchdog Office. Of course, this is the latest case in which the Inspector General said the Pentagon agencies allowed contractors to overcharge for the spare parts. So you want to see how this works. Because when I was reading this article, it's intriguing how it works. Because see that sentence there? This is a case in which the Inspector General said Pentagon agencies allowed contractors to overcharge for spare parts. So inside this case, in the Bell case, the Inspector General recommended that the Defense Logistics Agency seek to recoup the excess money and analyze prices to ensure taxpayers aren't being further overcharged. The contracting officer did not sufficiently determine whether prices were fair and reasonable according to the July 3rd report. Bell Helicopter, you're going to love this, okay? This is Bell. This is the speech by Bell now, a quote by Bell. Bell Helicopter does not agree with the findings or recommendations. Andy Woodward, a spokesman for the unit of Providence, Rhode Island-based Textron, said in a statement, Bell Helicopter has fully complied with all the applicable regulations and continues to adhere to its policy. What these contracts are about, folks, is that they're non-bidding contracts because no one else has the parts, because in this particular case, Bell made the helicopters for the Marine Corps and the Navy and the Army. I'll go down a little bit more because this is just pretty amazing. The agency potentially overpaid Bell Helicopters Textron. Now watch what they overpaid. $9 million out of a $13.4 million contract on 33 of 35 sole spare parts reviewed. What this report is about is that evidently when you sell the product and it's the spare parts that huge amounts of money are made on. That's the first part. But the second part inside this, you can see that the agency, meaning the Pentagon themselves, the contracting officers, are absolutely not doing their jobs, because inside of this, what it has is saying flat out, hey, listen, someone has to sign off on this. In this particular case, they're saying the officers signed off on it. Boeing had a similar case. And now watch what happened with Boeing. This is how good the lobbyists are with Boeing. In June 2013, the Defense Logistics Agency asked Boeing, based on another audit, to refund $13.7 million for what they called excessive prices for spare parts, including $10 for an aluminum sleeve, which the Pentagon paid $2,286. So Boeing is such a good negotiator that guess what? Boeing didn't come up with any money. You're going to love this. Chicago-based Boeing this year agreed to provide the agency with $3.2 million in parts to settle the case. Pretty wild, folks. It just seems to never stop on a continual basis inside those large contractors. And what happens there, of course, is that you get the contract, then you get the spare parts. There's not competition for the spare parts because most of those, it's just one company that's making them. And what do? You turn around, they're taking care of the contractors. Bottom line is that when you wonder why money gets basically flushed down the drain, that's what it is. Okay, across the world tonight, let's go to Hong Kong. If we take a look at the HKG, the Hang Seng, what you're going to see in the Hang Seng, is this. Last night, flat market, we're trading at 23,544. That market right now is at highs. What I expect, what you're going to see, let's see, was that? Yeah, that's the 8th. Okay. So the lower range, folks, is 23,243. That's down $300. You get inside that lower range, then you're going to get some real juice to the downside, because what the Hang Seng also has is a high volume low at both the February 5th low and the March low. The indices in Asia, the indices in Europe have the same type of characteristics as that we have. That's that February 5th high volume low. We'll see how we come down tonight. Tomorrow morning, what I expect you're going to see is that the FTSE came down hard today, down $85. Not that that's a huge amount. It's a huge amount, though, for a 6,700 price number inside the index itself. The lowest swing point and the FTSE is 67.01. We're going to be going after that. Now, the DAX is something you want to keep your eye on. Why? Because the DAX trades like the NASDAQ. That was down $1.33 today, closed at 97.72, and and that got in. So the DAX got inside its lower range. And so what that sets up, the lower range in the DAX is 97.94. So at 20 points inside it, what that puts on the table is that 8,900 is on the table, and that's a big hit. There's no two ways about that. What it also is going to put on the table is this. If we go back to where these markets started off at the beginning of the year, we're talking about 9,600. So the DAX right now is basically only 120 points away from where we started at the beginning of the year. FTSE, same type of setup. Our markets, same type of setup. What we did have out here today is that we had an expansion of volume as we went south. We did 682 million in the NYSE. We take a look at the NASDAQ. NASDAQ did, this is pretty cool, 2.2 billion in the NASDAQ. And I can tell you, if you're watching Tiger TV right now, very few days we've done over 2 billion when we look back the last 6 months. So the times that we have done that is that we are at lows or we're coming off highs as we're expanding on the way down. What I do expect you're going to see is the IBB. That's going to continue to lead that NASDAQ down. That was the counter trend bounce. IBB's at 253. That baby's on its way to 220. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look for what he's speaking of right here tomorrow. Go get him, folks.